Good morning, everyone, and happy Wednesday. And also, happy FOMC, or as Cornish would like to call it, Big Daddy Day. But yeah, seriously, we do have a big day in the markets today. Powell will be speaking at 2:30 p.m. Eastern Time. Historically, he has moved the markets up quite a bit, but there have also been FOMC days that were extremely red. So expect a lot of volatility. Today's going to be a giant day for the markets, but also just the economy overall.
Yeah, it's going to be huge. We had a lot of big earnings last night as well, like AMD, Airbnb, and a few other stocks. And Mike, they are holding up very, very well today heading into this event. So glad to see that these earnings are still going well. I know that this earnings season has been pretty good so far. So glad to see the big earnings still coming up here today. AMD is getting really close back up to $100 even, which is going to be interesting for that one. But Mike, my watch list actually has Starbucks leading the way. Believe it or not, up six. Well, it's actually flip-flopping with AMD, but it's up 6.2%. It kept flying up in pre-market with their earnings too. So pretty big moves here today out of some of these, I guess you could say post-earnings plays. But either way, I mean, Starbucks is one of those slower movers, and they're up quite a bit.
Gotcha. All right, yeah, that is awesome for Starbucks. Normally they don't move that much, like you said. So they're definitely moving in a big way. Like you said, AMD's not doing too bad either. Some of these other stocks are not looking too strong, though. I'll be honest. Like DraftKings is looking relatively weak today. Disney, maybe Penn, Zoom. Looks like some of these growth plays are moving a little bit slowly today.
Yeah, they really are. It looks like they're turning back over a little bit. Zoom actually looks okay, I think, compared to most of the other ones. But man, you're right, DraftKings, the way it's starting to turn over here just isn't a good sign today to start off. Hopefully it starts to consolidate a little bit, like whenever Powell starts speaking later on. Obviously, we still do have some time before Powell speaks. Quite what is it, Mike? Like 3 or 4 hours here. So there's definitely some time in the market. The market might end up going flat into this event, Mike. I know sometimes it has a lot of volatility. Sometimes it kind of goes flat awaiting the storm. And I can't wait to see what happens later because the market's at a crucial point. We've been waiting for this for a long time. And, the SPY is still pretty low here on the daily chart. So if the market ends up going south, it's not going to be a good look here for the next couple months. I know that the market has been really waiting this news. And, it looks like we're going to be raising rates. The question is, Mike, how much are they going to raise them? They keep saying 50 basis points. But as we know, it seems like on the CME group and other websites, they're kind of pricing in a little bit higher, like 75 to 100.
Yep, that's true. And that's the, I guess you could say the $1 trillion question, Tom. What, depending on how much they raise rates today, that will have a giant effect not only on the market, but, from everything from mortgages to bonds to everything, So it's definitely a big day in that sense. And I feel like obviously the market is pricing in a hike, but it just, the question is how much,
Yeah, and look at the 10-year Treasury index popping up today into this event too. Pretty big move back up towards $30 again here on TNX. As we can see, the 10-year Treasury index has been exploding over the past few months as the market has been shaky. So pretty crazy to see how high it's actually getting here. You can see it's getting pretty overextended. Let's look at that max daily though. Gives us a little bit better view. So you can see $30 is actually a pretty big price point along with 32. So we'll have to see how this one ends up going with everything else. I know gold was looking pretty good today, Mike, this morning at least, but now it's kind of falling back over too. I was hoping to see GLD start popping back up maybe ahead of this event.
All right, yeah, we'll see. And then we have, let's see, Iranical saying Baba is falling too fast. Let's see, Alibaba is down around 3% today. It definitely gapped down, but I don't think this is too bad, Tom. I feel like these China stocks have been volatile lately. The IV's around 80%, and especially when you look at it on the daily chart, it is still making higher lows, even over the past couple days and the past month or so.
Yeah, it really has. Whenever we touched that resistance, right around $80 to $82 there, we had a nice bounce back up. And, that low down there is 73. So we definitely had a little bit of a higher low, which is like you said, like a good sign there on the chart. And then, today is not too bad. Like you said, it is down a little bit. The thing that sucks with these China plays is that they often gap up and gap down because, as we know, the foreign market plays such a big role in these stocks, and their markets open different times than us. So sometimes BABA will gap down based on what happened in China or something overnight. So that's kind of what we're seeing today, but I still think it's okay. Like Mike said, we're still kind of at this support of this week. On Monday we were bouncing around $95, so we're still holding that pretty well.
Alrighty, sounds good. Looking at some of the other plays, Tom, what are you seeing that is moving?
Yeah, so to the upside today, there's actually a lot of oil plays actually moving up. So I'm going to go ahead and bring up Oxy here. That's going to be the first one, of course, with Warren Buffett and everybody getting into this one lately. I know, Mike, who was selling out of it? Carl Icahn?
Yes.
Yeah, that's pretty big. I mean, he's selling out. Buffett's buying billions of dollars worth of it. So interesting to see Oxy back to the upside. I know that Russia's been back in the headlines a little bit, Mike. There's been some more pressure over the past few days, at least from what I've seen. It's definitely still been on CNBC and other websites. So oil's still coming up here. Oxy's moving, Zom's moving to the upside. CVX is kind of coming back. CVX on the daily chart, Mike, is a little bit lower than some of these other oil plays. Like if we look at Zom, it's almost back up to highs here, believe it or not. Same thing with Oxy, but CVX has been kind of lagging behind the past few days.
Interesting. Yeah, good observation there. And related to like oil prices and everything starting to pop up a little bit, I believe May 9th is Victory Day for Russia. It's a holiday that dates all the way back to World War II. But basically, some people are kind of, I don't know, I don't want to say expecting, but are considering that something bad might happen on May 9th, considering it's like a military holiday in Russia and considering everything that we have going on in Ukraine right now. So, I don't know, that's just another thing to watch out for. Again, that's just speculation, though.
Yeah, that's going to be big. That could definitely mark something if Putin decides that he wants to use that date as like a good time to maybe assault some certain cities or something like that. It could definitely be possible. And I know Victory Day is pretty big, Mike. I've known people I've played games with from other countries and stuff like that definitely celebrate Victory Day. And I know it's not just Russia. It's like a lot of countries in Europe celebrate Victory Day. So that's going to be a big event. Hopefully nothing happens, but it looks like right now, Mike, oil's in a pretty crazy setup, to be honest. It's been holding on the daily chart here, as we can see, right around, it looks like $90, $92, $93. Tons of bounces off that bottom support, and it looks like it's kind of coiling here, getting to like the end of this move. So maybe we'll start to see a big pop around May 9th. That's definitely a big possibility there.
Yep. Alrighty. Sean said TNX blasting off. Uh-oh. Yeah, it really is blasting off. And then at the same time, like TLT's tanking down, which would mean rates are rising. But yeah, I mean, it's it looks like the market is definitely what appears to be pricing in a rate hike, as we can guess.
Yeah, and that rate hike is going to happen. It's just how drastic is it going to be? I'm really curious, Mike, because we get a lot of conflicting views. Like the CME group here. Here, I'll refresh the page. As yesterday, it was 99.1%. Now they're pricing in a 96.8% chance of it being a 75 to 100 basis point hike, or a 3.2% chance of 100 to 125 basis points. So it's kind of hard to tell, Mike, because, Powell keeps saying 50 basis points, but we keep seeing the CME group here with 75 to 100 or 100 to 125. And then if we go out to like July on the CME group's outlook, you can see, look at how much they're really expecting, 200 to 225 basis points. Keep in mind, this is by July, but still, that's a ton of movement there, Mike, and rates. And, they're definitely expecting a big move. So I'm curious to see if Powell and the FOMC raise it a little bit higher than people expected.
Yeah, that's true. And I'm very curious to see how this rate increase is going to have an effect on the housing market. I'm not necessarily expecting a full-on crash like we saw in like 2009 or anything like that, but I would definitely think that it would kind of slow things down. The housing market has been booming for a couple of years now, and When you have rates, I believe I believe 30-year mortgages since the beginning of the year, I think went from 3.3% up to like just under 6%, which is a giant move for only a couple months. And while that might not seem like a giant move, it really is when we're looking at mortgages.
Yeah, that sounds like a huge move, Mike. I know I've heard lately some pretty crazy numbers with people who are buying houses and different stuff like that. Here, I actually have a chart here of the 30-year fixed. So here we go. It's from the St. Louis Fed. So look at this. You can see lately in as we head towards 2020, of course, there's become a huge uptick. So yeah, here we go, Mike. This is actually really good data. So at the beginning of this year, we were sitting at like 3.11% here, which is a pretty good mortgage rate, obviously. And now, Mike, as of April 21st, it's reading 5.11%. That is you're right. That's been a huge jump actually over the past few months. I can't believe it's been that high, and I've heard people even getting screwed out a little bit worse. So hopefully the numbers start to go back down a little bit. But man, that's really telling. And actually, Mike, it's all the way back up to like the levels we were at. It looks like like almost back up to like 2009, 2008 levels, just about.
Yeah. Interesting. So yeah, we'll see. It's definitely crazy. Yeah, it really is crazy. Like I'm sure that increasing rates will kind of hurt at first, but it is truly necessary because we can't go on with the inflation that we're seeing now. Like that would just be disastrous.
Yeah, it really would. That's a really good point. Like they have to do this, which is kind of why like Powell said over the past 6 months, like the Fed is going to use their tools to combat inflation, and that's exactly what he means. They have to do this, or else inflation's just going to get worse and worse. And as we know, whenever inflation gets worse, the value of your money goes down. So we don't want that to happen. Obviously, that's obviously worst case scenario. So hopefully this does help inflation, Mike. I will say it's probably going to hurt the market in the short term, kind of like what we've been seeing with the SPY and the Dow and everything kind of dipping down lately. But I will say I do think that the market will get better, though, over the next maybe 6 months to a year. Obviously, the Fed, they go through certain cycles like this. People talk about it all the time, and this is one of their rate cut cycles that they're going through. And it's just one of those market events and market swings that just happen all the time. They just have to do this, and it's just something that it's definitely happened in the past too. I remember Yellen was cutting rates one time, and the market was going just as crazy as now. So it was definitely a big event then, and as we're seeing, causing a lot of volatility even now.
Alrighty, so I am doing a couple quick scans for some plays that are moving, and I will say Lyft is being spammed, Tom. You had to check it out. So it's down 31% today. They had a brutal earnings report, and it is just breaking lower by the minute.
Yeah, this is brutal. Holy, down 30%. I mean, this is terrible, Mike. They're almost down to $20. Like, let's see that max daily chart just to see how bad they are. And it's kind of hard to even see it because the earnings symbols down there. So, but you can see that they gapped all the way down to where like my cursor is right now, to $21 on the chart. That is just a terrible drop. They're almost back to those levels of COVID, to be honest, Mike. They fell from during COVID all the way down to 1456. Man, they're getting pretty close. So definitely not a good look for them. I wonder how Uber's doing. Uber's kind of following along, Mike. Definitely not a good move by them either this morning.
Yep. Alrighty. What other stocks are you watching, Tom?
Yeah, I mean, a lot of slower movers today are starting to do good again. I know, like, we always talk about these stocks lately because a lot of these growth plays just keep falling back off, but Walmart is actually having a decent day. Well, actually, not too much with Walmart, but a lot of these other ones like Caterpillar, McDonald's, Pepsi, they're all setting up pretty well back to the upside today, which is good. They had a decent drop from the end of last week heading into this week, and looks like they're starting to get some more momentum to the upside. So if you guys are looking for stuff to trade to the upside, it looks like some of these value plays are doing okay. Even some of the banks, Mike, are looking kind of good. Like JP Morgan is coming back up towards those resistance levels of yesterday, like right around 124. So be careful of that. But I will say, like, look at this on the 1 minute. We're coming back pretty good, and maybe the banks will like rates going up. I've heard, Mike, that the banks have been dipping a lot lately, and a lot of people, I shouldn't say I heard, I should say a lot of people have been contemplating that these banks are down because Powell and the Feds waited way too long to raise rates. And now that rates are going to be raising at a rapid pace, a lot of people are contemplating that the banks might start coming back up here. So we'll have to see what happens, but maybe that'll be the case. The banks have really been dipping quite a bit lately, believe it or not.
Yeah, true that. I don't know if you've seen this or not, but check out Moderna. Moderna stock was flying up this morning, and now it completely reversed. This just goes to show you the volatility that we're seeing. Like, Moderna was up, I think, at its high point, maybe 8%, maybe 10%, something like that, and now they're about to go red.
They really are. They were up to 159 in pre-market with their earnings, and now they're coming right back to the downside. Mike, it looks like that EPS really beat. They came in at 8.58 versus a 5.17 estimate. That is a huge beat there. So I'm glad to see that they moved up, but now that they gave the gains back, that is a big negative. I know that poor Moderna has been really beaten down lately. We can see on the daily chart, it's been super low. They had highs of $497 or almost $500. Now they're at 146. So definitely a lot lower than they have been. And it's just hard to keep up with that type of hype, as we've seen, Mike, with Zoom and every other type of growth stock. Just about, it's kind of had similar moves like this. So pretty crazy to see, but it's one of those crazy circumstances with COVID and with the growth plays going back down and everything. It just it's been hard for Moderna lately.
Yep. Alrighty. And then let's also take a look at AMD right now. Of course, it was looking pretty good in pre-market, but it's kind of giving me Moderna vibes.
Yeah, it kind of is. And they actually had really good earnings, believe it or not. AMD reported some of the best earnings I think I've read over over this season so far. So I thought that was cool to see, but they are coming right back, and they have a big support down here around 92. It seems like in yesterday and after hours, they had a lot of movement right around like $94 also. So maybe that will hold up as support today, but you're definitely right. It's giving me those type of vibes. Mike, it really like double topped here around like 98.50. That's a pretty big move there to the downside ever since it touched there. So who knows? Maybe that 98.50 to $100 resistance is going to hold up on AMD.
Yep, we will see. And then let's also check in on the SPY really quickly. I'm seeing a lot of like neutral / consolidation type movement. What are you seeing?
Yeah, I'm kind of seeing that too. I feel like that we're going to see this throughout the day today heading into this event. I don't think that we're going to see too much movement until maybe like 2 hours before he speaks, or maybe an hour heading into that. I think that'll definitely be when we start to see more movement. But for now, we can see it's just really flat. We were kind of popping up in pre-market, but we gave those gains back a little bit. I will say my watch list is pretty red today. Definitely not good there. Most of the bigger stocks, though, are in the green, which is good. But still, though, we do have some big stocks red, like Nvidia's down like 1.2%. I'm trying to find more. Facebook's down again. So we're definitely seeing some of these bigger tech stocks falling off still. And even Tesla's back in the red. So, well, at least it is, technically compared to where it opened. But, you can see they were in the green earlier. But the main thing is the market's kind of giving back its gains. And I'm with you. I feel like it's just going to be flat throughout the day today. Mike, how do you feel about some of these plays like VXX and UVXY and stuff like that? I'm sure we're going to be asked about these ones quite a bit today, especially like right before the event.
Yeah, of course they can be great hedges if you have exposure to the S&P. Honestly, I have not been loving them lately. Like, especially over the past like couple months, the market has been absolutely brutal. And VXX has been very, very, very flat, especially for this type of market. Another thing is VXX was acting very weird and crazy like a couple weeks ago. And I just don't love it right now. If you're looking for hedging exposure, or if you're just looking to protect yourself, I think the best way to go is to just buy the puts on the individual stocks that you want exposure to, because VXX is acting weird, and The other ETFs, they can be decent sometimes, like SPXS and maybe even like UVXY, but still, it's like I feel like the individual puts would just be the way to go for this circumstance.
Yeah, I feel like it's really hard to win on some of these ETFs like VXX and stocks like that. Like the stocks, they haven't been moving a lot lately. Like VXX. Look at this over the past few days. Like unless you bought it like right at market open a few days and caught that momentum early in the morning, you were pretty much screwed. Unless you were buying puts at the top. But it's been crazy the past few weeks with how these volatility indexes and everything have been moving. I know like VIX itself has been holding up okay. See, like you can see VIX itself has been having some, pretty decently huge moves. And then we go look at VXX and it's just been kind of like a heartbeat monitor. So kind of, you're definitely right there. UVXY looks a little bit better. This one I think has been following the VIX a little bit. At least on the chart, it looks like it has been a lot more. I know VXX probably still technically has by its movement, but it's definitely you can definitely tell UVXY has had a lot bigger moves because it's a what is it, Mike? 3x?
I thought it was 1.5, maybe 2x. Yeah.
Okay, yeah. Well, it's leveraged either way, like 1.5x, 2x, 3x. There's a lot of ETFs that have those different weightings, and it's weighted a little bit different than VXX. So of course it's going to move slightly different, but to see this much of a difference is pretty telling, especially when you look at the VIX itself. The VIX itself looks a lot more like UVXY than it looks like VXX. So keep that in mind. But yeah, it's definitely going to be a big telling sign, Mike, later. I hope that the VIX doesn't keep popping. It kind of had a nice pop up to begin the week this week, and I hope that tomorrow it starts to maybe fall back off a little bit, kind of like what we saw over the past 2 days. That would definitely make for some good movement here, but it's not too promising for me, Mike. I will say, like, when we look at the VIX on the daily chart, we're all the way back up to like $35 or $36 again. And, recently that's been a good buying point for the SPY. Like if you follow, a lot of these different dates and you look at the days VXX was breaking 36, kind of like on January 29th, again on like, October 28th, October 30th, right around there. And then you go look at the SPY on the daily chart and you go to like, let's say October 30th, for example, you can see that's like a very low point for the SPY. And a lot of the times VIX comes up and touches 36. The SPY has been a great dip buy there. But as of now, I'm kind of curious to see what's going to happen because the VIX is back up at 36. The SPY is at another dip buying opportunity. So it's going to be crazy, lots of factors here. And I have a weird feeling that the market might not play out how it has been lately.
Yeah, and that's a very good point, Tom. I know some people use the VIX index as a buy signal indicator. Like once it breaks above a certain threshold, like you mentioned, 36, people just buy up bullish things in the market because as we've seen throughout history, a lot of times when the VIX pops up above a certain level, it ends up being a good buy point, and it makes sense, logically. Just one thing to note, guys, is we are looking at the VIX index, not VXX, not UVXY. We're looking at the VIX index. And a lot of times when it does break above 36, that does end up being a good buy point, with the exception of a few rare cases where the market explodes higher, like in, when the COVID crash happened back in like March of 2020. But those situations are very rare, and normally there are other catalysts that come into play that cause the meltdown in the markets.
Yeah, definitely. And right now we're kind of sitting on a big catalyst ourselves. We have Powell speaking later and they're expecting to raise rates by a lot, and nobody knows quite how much they're going to do it by. And if they do it by more than people expected, then we might see, the VIX pop back up through 36 or something. And that might be one of these big catalysts. But, the main thing is that there's just so much uncertainty right now. It's a really tough time for a lot of these indexes, especially things that follow the VIX, of course, Mike, because as we know, that's been a big resistance. And now we're kind of coming back down. It's definitely going to be crazy today. I can't wait to see what happens. We'll definitely be talking about it a lot in tomorrow's live stream too, and in tonight's video. So definitely stay tuned for that. But definitely looking crazy here with the SPY. Still just going flat today, Mike. So far, no real movement. Kind of looks like it's popping back down right now, but still nothing crazy.
All right, there we go. And then we have S saying IV on the SPY looks good. Hold off until the meeting is over to buy a long-term call on the SPY. Sorry, with the question mark. Yeah, that would probably be the better way to go. Like I said when the stream first started, there have been many times where the market booms up off of FOMC events. There have also been many times where the market tanks down off of FOMC events. For the most part, it's been positive. But if you wait until after the meeting's over, you will have a better gauge of how the market is reacting to it. Hindsight's always, 100%. But I would probably wait until after the event too. IV might fall a little bit. If you do decide to get a long-term call on the SPY, make sure that you are in the money, preferably.
Yeah, that would definitely be a good idea. I know that sometimes, getting in the money on those longer term calls can be kind of expensive, but it's really worth the price, Mike. Like whenever you put everything together, whenever you look at risk and everything, at least to me, it's usually worth the price. So definitely look at something like that. It'll have a lot safer movement, of course. And, Mike, like I know a lot of people, like I'm looking at like December of 2022 right now on the SPY, and at the money, like a 4.7, like let's just say we even get in the money here, like let's say like a 4.15 call just slightly in the money. You're looking at still like, man, this is pretty crazy, Mike. Like $3,200, $3,300, not too bad for such a big ETF like the SPY, but still, that's quite a bit for a lot of people. And if you still go out of the money, I mean, Mike, even going out of the money to the 450 strike is still like $1,400. So the main thing is you might be paying double to go in the money, but you're just getting so much more safety with it in the end. So I think it's worth it, but it's still a lot of money for a lot of people.
Yeah, like I wouldn't be buying a long-term call on the SPY right now. I would much rather just get shares. Another thing that can be done if you were bullish on the SPY, you can always just get like a call debit spread. That would be like a fraction of the cost of a naked call by itself. At the same time, you fight time decay a little bit more. So I would definitely check that out. You can here. Let me see something really quickly. So let's say you went out to I don't know, maybe January. I don't know, Tom. What expiration were you looking at for the SPY?
I was looking at December. I was looking at December 16th.
Okay, so let's say we go to December 16th, and which strike were you looking at again?
On the SPY, I was looking at the 450 strike as the out of the money strike, and then as the in the money strike, I was looking at 415.
All right, so 415. If you wanted to buy that call by itself, it would cost anywhere between like $3,200 and $3,300. Like Tom said, that can be pretty expensive. So what you can do instead is you could buy that 415 call, and then at the same time, you can sell like maybe like 400 and let's say you sold like the 460 strike call. That would bring the total cost all the way down to $2,200. So you would end up saving around $1,100 just by turning it into a spread. At the same time, you fight time decay more. So that's another option. Another thing you can do is you can go to like SPLG, Tom. Or no, I think it's SPLG. It's basically, it's very similar to the SPY. It's just less liquid. So you can scoop up shares or calls to this one. Like I said, though, the chain is kind of illiquid, so you have to be careful on the fill prices.
Yeah, this one's interesting. I've actually only heard of SPLG a few times, and looking at it here on the daily, I kind of forgot it was so low in price. $48 to $50 lately. Not too bad. I mean, I know obviously it only goes the highs at 56, but still, I mean, if you look at that, that's still like a pretty decent, just like the SPY, so not too bad there. I'll definitely take the moves out of it, and you're right, it might not be as liquid, but it's definitely a lot cheaper, which is good. So that's definitely a good thing there. Looking at it, it's definitely moving like the SPY, which is good. I know it's SPDR, Mike, which is that's actually the same exact like company that does the SPY, isn't it?
I believe
Yeah, it
so.
is actually. Yeah.
There we go.
SPDRS. I always call everyone calls them spiders, and they have the little spider symbol there. It's kind of cool, but
Yeah.
I know that that doesn't really have anything to do with the fund at all. I was just pointing it out just as a cool cool reference.
Yeah, for sure, for sure. Alrighty, so looking at some of the other market moving stocks today, Tom, it looks like the SPY's breaking down, kind of like you said. Nvidia's on the low ticker, Facebook's on the low ticker, Neo, Snow. Yeah, it looks like a lot more red than green so far today.
Yeah, there is. I will say Facebook is definitely moving lower. It's right around that low of yesterday, actually. I wonder if it'll start to pop back up like we saw yesterday. We had lots of intraday bounces off this 208 to 208.50 level. We might see that bounce happen again today. Who knows? So far, though, we're seeing a lot of tech selling off. So, I'm definitely kind of leaning more to the downside than the upside. But, I can definitely be hopeful for a nice pop here, Mike. Hopefully the support holds up today. It would definitely help with Powell speaking, that's for sure. But yeah, lots of these stocks coming back down, unfortunately, today. Not a good sign here. So going to the bottom of my watch list, Fastly's leading the way, down 8.8%, Mike. Not good for them. Unity also down in a huge way today, 6% again, breaking the lows of yesterday and this week, actually. So that's not good. And Mike, we have Block or Square also selling off in a huge way, back below $100, down 5.5% again. They are exploding below $100, actually. This is not a good move. Look at this on the 1-year daily. Looks like they're going to be trying to retest that support around like 92 or something again.
Wow, right before earnings, too.
Yeah, I know. I was kind of hoping for them to get a nice boost back to the upside here ahead of earnings, but yeah, it seems like they're definitely breaking lower. What I really don't like, Mike, is that there was a pretty big support, like I said, right around $100. That's huge. And now we have another one at 90. Maybe we'll hold up somewhere around 90, but yeah, it's going to be a tough go, especially with other tech selling down. And I'd hate to see them report negative earnings after having this type of movement. I mean, who knows how much lower they'll go now that they're below 100.
Right. Yeah. Hopefully not too much lower, though. Jeez.
I know. I'm trying to scoop up shares here for the longer term. And I'm like, man, it's brutal lately. These stocks keep falling back down. I was really thinking with Square, Mike, that whenever we started moving back above 100 and we were retesting 130 to even 150 over the past couple months, I was thinking maybe we were going back on the uptrend. But wow, I mean, I can't believe we're all the way back down around lows again. It's just the way the market's been moving, Mike, lately has been just absolutely insane. I just can't believe all the up and down and volatility, all the up and down movement and volatility we've been seeing. It's insane. And the thing is like we've been saying, the VIX itself hasn't really been doing all that much. It's more of just these growth stocks and just all the stocks in the market falling.
Yeah. Alrighty. I think we covered everything, Tom. Do you see any stocks that we might have missed?
Yeah, I mean, let's see today, up in the green, nothing too crazy. Some that are green, Mike, again, they've had 2 back-to-back great days, I believe. Enphase and FSLR again are looking great. I mean, well, not great, but, at market open, they were popping up quite well. They still have a lot of green candles coming in, so that's good for Enphase. FSLR, same thing, kind of moved up at market open, kind of consolidating now, but still not the worst setup compared to what we've been seeing in the market today. So looks like these plays are doing okay. I know Starbucks is kind of starting to come back down after popping here up to 80. Looks like AMD is also falling back off in a big way, Mike, with the rest of the tech stocks. So that sucks to see. They're kind of giving all those gains right back. JP Morgan, though, is still doing okay. Mike, I really have a good feeling that these banks might be a really good sector to look at today. I've been pretty bullish on them heading into this event, and I hope that they turn things around. They've been really dipping. I think that this will be the main thing I look at today, Mike, is probably the banks. JP Morgan's at a huge support at 120. We have Bank of America also around a big support, right around 35. We were just above it at 35.30, but still, I mean, these are some big levels, and banks really need some good movement, Mike. It's been a long time since they've been on the uptrend. And I know they were doing quite well there for a while, and then I guess when the Feds didn't raise rates when they were expecting, they kind of fell back off. And obviously the banks also missed on, well, they didn't miss on earnings, but they didn't report the best numbers there for a while too, so they started falling back off, and other factors too. But still, I mean, I hope that these rate decisions help the banks come up. And I feel like today, Mike, this is pretty bullish given everything else we've been seeing.
Yeah, that's true. And another thing that is interesting is, let's check out Apple really quickly. So Apple is one of the most influential, if not the most influential stock in the entire market, especially when it comes to like the S&P 500 and stuff like that. And it's holding up pretty well. It's up 0.6%. It's above 160. So I think this is a good sign, considering everything we have going on. If Apple was bleeding off, I would be more worried. But hey, it's holding up pretty well.
Yeah, you're right. It actually is. It's holding up very well. It had that nice move it open, kind of like the banks, and I'll definitely take that. That's definitely a good move. So glad to see Apple coming up. That's definitely a big thing there. I know they've been consolidating a lot, Mike, around 159 to 160. Maybe they'll hold above 160 today. It looks like they have a pretty good chance to now that they moved above it. Let's see Apple on the daily, because I know they've been kind of falling off with the SPY, but it's kind of good to see them. You're right. They're back up in the green today, continuing the nice uptrend here, and who knows, maybe they'll help hold up some of these tech stocks, Mike. But as we've been seeing, though, a lot of these tech stocks are still selling off. So, man, I think Apple they need to carry the market harder. It's kind of like when you're playing Call of Duty with one of your like cracked out friends.
Yeah, true. Alrighty, well, Tom, I think that's everything. Like, if you don't have any other stocks, I think we're all set.
Yeah, I mean, nothing too pressing still today. Obviously, the main thing is going to be the event later. Keep in mind, guys, Powell's speaking at 2:30 p.m. Eastern time. The rate decision's coming out at 2 p.m. Eastern time. We still have the SPY moving lower here. Looks like Apple's not helping them enough, Mike. It's still coming down, which sucks to see. Hopefully we can bounce at maybe some of these support levels from yesterday, but it's going to be a big day. A lot of these value stocks are moving, like McDonald's, Pepsi, Coca-Cola. Stocks like that are still looking okay today. So maybe those will be the type of stocks that we have to look at given their safety. I'm sure, Mike, heading into this event, some investors are selling out of some riskier plays and moving money into some of these safer ones. So we'll have to see what happens, but the event later is going to be huge. I hope Powell doesn't raise rates too much, but as we know, he's been kind of hawkish lately, so we'll have to see.
Alrighty, well, thank you guys so much for joining today's stream. Be expecting a lot of volatility in the markets later. Before we close out, I just want to shout out everyone who joined. So thank you, Paul, Sean, Vicky, Iranical, George, Hunter, S, and I think that's everyone. So thank you guys so much for joining, and let's have a great day.